We will get started with something slightly unrelated to crypto, which is I asked each of the panelists to share something interesting about themselves to kind of give a flavor of something that I feel is sometimes underappreciated about people who work in crypto, which is it is not as stereotypical as folks may think it is. It isn't only about Bitcoin. It isn't only about NFTs. It isn't only about insert buzzword of the day, algorithmic stablecoin here. So, Edwin, I'm going to start with you. Share very quickly your interesting fact.
You know, my interesting fact actually is about crypto, but it is a fact that I think that not a lot of people really appreciate, which is that we did a study that is actually coming out, I think today. Today's Wednesday, right?
Today's Wednesday.
It's coming out today that we did in conjunction with Deloitte. And we surveyed 2,000 CEOs and executives across the retail and merchant space, and they had indicated that 64%, so almost 2/3 of their customer base, was interested in paying and transacting in crypto in the coming 12 months. And again, I think that we really underappreciate crypto and digital currencies as something of use and something of utility, so I wanted to bring that into the conversation.
So my fun fact about myself is I came into crypto by way of tech and fintech. So I've actually lived the last 6 years in Hong Kong, first with Uber for the first 3, and then Ant Financial for the next 3.
Nothing going on at either of those places.
Nothing going on out there, yeah. But I'm very glad to be back in the land of freedom and Chipotle, so it's good.
In that order. Yep.
So fun fact, I'm born and raised in Hong Kong. I came to the US when I was 16 and bought my first Bitcoin in 2013, but really got into crypto when I was traveling back and forth between here and China. And if you can sort of flashback in 2017, 2018, China really was the center of the universe in terms of crypto trading and crypto mining. So during those times, really met a lot of crazy scam projects and learned a lot. That's how, when I finally got the chance to meet Anatoly in January 2018, it really set him apart. We're going to stop here.
Okay. Well, I want to push a little bit on what you said about China, because I do think that had we been having this conversation 2 years ago, and I had asked, looking forward, where do you think the biggest areas of growth may be? China specifically was one of the areas that was really held up as doing particularly interesting things. In the past 12 to 18 months, we've had everything from a complete declaration that any crypto transactions are illicit and with civil and criminal penalties. The government has said very explicitly that state-owned companies aren't allowed to do anything related to mining or to NFTs. How has that changed where crypto is going in the region, and what other countries might be taking advantage of the gap left by China's regulatory moves?
Well, I think, sitting right next to Brian, he always have an even more colorful history with Binance. I think sometimes I half jokingly would say, I think anything the Chinese government really want to block means that this is really a thing. So in some sense, in 2017, 2018, I think even before Binance came online, it was like Huobi and OKEX both really was the number 1 and 2, I think still top 5 in the world in terms of trading volume. But what's going on, particularly in the last 2 years during COVID time, I think a lot of talents in China have basically left to Singapore, to Dubai. Some of them come back to the US. And I think what's really interesting, even though in terms of US, there's no clear, but I think the Biden administration really wanted to push to regulate. And I think this is a really, really good sign. On mining, I think it's interesting, even though you're supposed to not be doing it. But I think as I last checked, there's still at least 10 or 20% hash power come from China. So it's not completely, there's still things going on, but many of the talents, again, is looking and push a lot of the Chinese entrepreneur to think globally.
Brian, when folks hear about Binance, it's often in some sort of regulatory context. Our folks at Reuters this week published a big story about various allegations related to money laundering, KYC, et cetera. And I think that the biggest regulatory question in the US isn't will crypto continue to be allowed to exist, which is really a genuine question in certain other areas, China, of course, but also even India. In the US, it's more like, under what circumstances will crypto be allowed to exist? What are the changes that are coming for the players involved? From the Binance US perspective, where do you see that landscape evolving into?
So I think that just the announcement this week with the Senator Loomis and Gillibrand bipartisan legislation, that is a really great step, right? And I applaud the senators for actually taking a stab at it, right? And I think that over the course of time, that bill will continue to be perfected. But I think that what we are looking for and what we advocate for at Binance US is clear and consistent and smart regulation. And the reality is right now we are operating in a little bit of a gray area because the rules of the road have not been defined. Mm-hmm. And what we're asking for, and what I think that bill really tries to accomplish, is actually creating standard definitions and then standard regulatory frameworks. So we are super supportive of moving forward with those kind of smart deals in place.
When, in your because you use the word perfected, what does a perfect bill look like?
Well, I don't think any bill in Congress is perfect, but I think it's a process, right? And I think that the process starts really when they put the first draft out. And so now we can all see it and we can comment on it. And I've met with the senators and their teams, which are excellent. And they really, truly kind of understand the industry and they're willing to have a dialogue with industry. And so I think that this is kind of a first step in the process and we're excited to be at the table and going along that process with them.
And PayPal has been a regulated financial services provider for a very long time. And one of the earlier ones as it relates to crypto, digital currencies. I also feel like I get an email a week from either PayPal or Venmo pitching me on upgrading to some sort of PayPal account. Tell me a little bit more from your perspective where PayPal sees the industry going, particularly as it relates to retail payments and not just retail speculation.
Yeah, I mean, I think Brian's right on that. We certainly welcome the clarity and the consistency that regulation and a clear set of rules brings, because our view really is that it can't be just about speculation. It can't be just about people going to the casino and playing with their Doge. Our view is really about trying to figure out how we get these digital currencies, whatever form that they eventually end up taking, to be useful for people, to be usable for commerce, to be usable for payments, to be usable for cross-border. And the stat that I shared earlier, I think, is just part of that to say that I think it's going to be closer than we think. Mm-hmm. It's going to be closer than we think. That people are going to see that there's value in instant settlement. They're going to see that there's value in certainty. They're going to see that there's value in the transparency that you can get by having crypto that is visible and traceable to a certain extent, but still preserves privacy. And so I think that from our standpoint at PayPal, our view has always been that financial services are a way to empower people. It's a way to, and we see that digital currencies just help us reach more people, to become more inclusive, and to really expand that the power of digital services to a wider audience.
One of the things that advocates of crypto as a mechanism for financial inclusion like to point to is this is going to be a way for people who are historically underbanked or unbanked to get into the payments ecosystem. Edith, we were talking about the potential uses of remittances. The challenge is, in a lot of cases, it's non-trivial to sign up for a wallet. You still need a relatively modern smartphone. You still have to provide or should be providing certain forms of identification. Are you seeing, you individually or collectively, seeing anything in the industry that is also adapting to be more of a realistic option for people as opposed to a theoretical one?
Well, we talked about how in September last year that the country of El Salvador and actually treat Bitcoin now as a legal tender. Mm-hmm. So Elizabeth Starr, who's the founder CEO of Lightning Network, really sort of powered that. And I think the part that is so fascinating to me is that 24% of the GDP of El Salvador, which is about 6 billion, is actually all about remittances, which to me opened up a whole world of potential between US, Mexico, US, India. There's a lot of possibility to really drive that. And I see you guys, you obviously are working on probably something around it, yeah. But it's just so exciting to see. And on top of that, just to add on to one thing, US is actually, particularly with mobile phone, both with iOS and Android, more so iOS, the credit card is actually attached to the phone. But that's not the case for the rest of the world, not for Southeast Asia. That's why otherwise you won't see things like M-Pesa off of Kenya. And that, I really think that crypto can help drive, because it's really difficult, except North America, in terms of payment and remittance and all that.
Yeah. So this is what I'm excited about. Is blockchain, crypto, Web3, kind of whatever buzzword you use, is really a technology platform, And so how are we going to use this technology platform to change historical processes or procedures or industries, et cetera? When I was living in Hong Kong, it took me, I think, 4 days to send money from my Citibank Hong Kong account to my Citibank US account. 4 days. And then the fees were just insane. If you had a Binance wallet and you're sending it to another Binance wallet, that's instantaneous and it's free.
Yep.
And I think that is really game changing. And those are the things that we're focused in on is, how do we actually focus in on making this a product by combining not only the technology, which is obviously key, but then the operations, right? Because you can have amazing technology, but you don't pair it with operations, then you won't be successful.
Yeah.
And I think that, we talk a lot about remittances, which are an amazing use case and I think really valuable, but also there's a lot of need here even just in the United States. I mean, when we looked at the stimulus payments from, I guess it's about 2 years ago now, there were 30 million people that were eligible for stimulus payments that could not get them through direct deposit because they didn't have a bank account, they weren't eligible to file electronically, and so they weren't in the system. They had to wait for a paper check to be mailed to some address that the IRS had on file for them from years ago. They were waiting weeks. And at that moment, when you needed to pay rent or you needed to go buy groceries or you needed to do whatever, you got that check in the mail. What did you do with it if you're underbanked? You went to a check cashing place. You paid 20, 30% for the privilege of cashing that check. There are real use cases, even here in the United States, where having access to efficient, effective, safe forms of digital currency can really, really help people. And these are people that have IDs. These are people that are part of the system in other ways, but for whatever reason, they're in a banking desert, they don't have a good relationship.
They're a Citibank customer.
They're a Citibank customer. They just have slipped through the cracks. And this is, I think, a huge opportunity for us to be able to reach a class of people that have just been ignored.
I want to add one thing since you talk about stimulus check for Hong Kong. They actually push a stimulus check to WeChat Pay, Alipay, or the Octopus card. That's efficiency.
Yep.
And yeah, so I think there's not only the technology part, but regulatory and government, how they push it makes a difference.
So there's two things that are challenging about what you have described. One is like the last mile problem. Okay, so you can go Binance to Binance, but you still have to get the money in and out of Binance, and that is where a lot of the complexity lies. If anybody has ever helped a less than tech savvy relative attempt to remember their keys, you're dealing with non-trivial technical undertakings, as well as just there are banks that will not allow you to fund a US banks that will not allow you to fund a crypto account. Or when you're trying to withdraw it, you are thinking about the volatility of if I wait today versus tomorrow, am I going to make or lose money on this transaction? So I would be very interested in your perspectives and what you are seeing that is helping with that crypto last mile. And then to the point about the government and crypto, sometimes when I say this, depending on who I'm talking to, people get a little bit these things are anathema to each other, because there is a very strong and persuasive set within crypto who really came from the cryptographic libertarian wing, as it were, of the industry, who are ideologically opposed to the idea that giving the government more access and visibility into people's crypto transactions is a way forward. How are you trying to resolve those things?
So, we in the United States were created for the explicit purpose of being a regulated and licensed entity. So since day one, right, we have been built for that purpose. And so we, as Binance US, have gone out and got our money transmitting licenses in the states that we operate in. We operate in 46 states, hopefully 50 by the end of the year. But we have the same licenses as PayPal. And so everything that they can do, we can do. And so what we're thinking about is how do we take this platform and how do we do the things that you're suggesting. We are actively working on that. And I think that there's a lot of things that we can do where we borrow from really other examples in other countries where it's working well. The Hong Kong example is actually a really beautiful example where the government is able to actually effectively airdrop payments into people's banks. And the reason that, and they could do that, we could easily do that in the United States. And that is because every user on our account is KYC'd, AML, and BSA screened. And so we know who they are.
KYC, know your customer, AML, anti-money laundering.
Yes.
Yeah, jargon comes out of the ear sometimes.
Yeah, my bad.
Not holding it against you personally. Edith, I wanted to ask you a follow-up question because so much of your portfolio, so much of your career has been about projecting who's going to be big, right? I think the myth is, or as you mentioned, that like you were excited about Solana before there was even a white paper written about this token. Where are you seeing like the next Solana or the next FTX potentially coming from? Are they in the US or somewhere else? Sure.
Of course. Of course. I think every single investment, when I think about it, it's always sort of the first principle for, and when we invested in FTX, BitMax was the #1, also based out of Hong Kong. And the thesis was really simple. We think that there should be another really great crypto derivative exchange. But anyway, I think for us is we look at Solana or the Ethereum of the world basically is the AWS of decentralized web. And if you think about AWS, by the way, the AWS and Google Cloud, they're not going away. Like Web 2 is still here.
And very profitable.
And yeah, but I think like the clear line in my head is, there's just so interesting is being incentivized by the token side of things. So the Solana validator is willing to run the validator because they are earning these tokens. And it makes sense. So it's like an economy of ownership and decentralized web. And what we're thinking and looking at is, okay, on top of AWS, you need to have what will be the next Twilio, what will be the data infrastructure, the more sophisticated payment infrastructure, storage. There's all these monitoring and developers tools that is not even there yet. And people are still complaining. And why? And there are people actually running Solana Nook on AWS too. So there's so many sort of intertwined between Web 2 and Web 3 for developers. That's what we're focusing on. I do think that for us, depends on what you work on. For what we look at, I definitely not regulatory expert and really leave the expert to do this, but it's really all about technology that for the developers. And if now they're starting to see, Solana, I think still monthly active users over 2 million, even with the down market. There are real people using this. And if you look at Binance US, PayPal coming into crypto would be amazing. These are real users, and that get all the developers so excited about it because real people are using it, not all hype.
And I think it's actually a really important point because to the earlier conversation, about 70% of our user base has onboarded to crypto through us. We are their first crypto experience.
You're the gateway drug.
And I think that I think we use different terminology than that. I think that what that shows you is that there is that user base, that there is that curiosity, there is that intentionality to come into this area. And the easier that we can make it for the developer community, the easier that we can make it for customers, the easier that we can solve that last mile problem. These are the things that really help that pie grow. And I think that really are going to create the next FTXs and the next Solanas.
What's your average transaction size for that crypto newbie who has come to it through PayPal?
I don't actually have that information.
And is it more that they are sending gifts to friends, or because I think when folks talk about, there was an earlier session and one of the panelists from Sequoia was like, we want crypto to be at internet scale, right? We want there to be 1 billion people. And my question is often like, what will they be doing? And can the existing networks handle them? Because we are in a situation right now where even with a relatively limited number of people, we have outages, we have significant downtime, we have every day we have to write another story about people losing a ton of money in hacks. We're not seeing scalability built into some of these technologies at the same rate of the desire to reach internet scale. How are you kind of, is there anybody in your portfolio that's tackling these questions? How is Binance thinking about this? How is PayPal thinking about this?
I think that for us, what they're doing with it is actually a really easy question right now. So up until yesterday, you could buy and sell crypto on our system, and then you could use it to pay at any of the PayPal merchants worldwide. So 30 million whatever merchants. If you had PayPal, if you had crypto on our platform, you could use that just like cash or just like your checking account or credit card to pay for goods and services that you can use PayPal for. And we think that might be the gateway drug because now all of a sudden you can use crypto at Best Buy, you can use crypto at Nike. They don't have to do anything, and they get paid out in fiat, and so it's a very seamless experience for them. As of yesterday, we now launched the ability to actually exchange crypto with other wallets like Binance or FTX or others. And so we expect to see a whole new class of folks that are using the crypto on our platform to engage with Web3 in the DeFi space, to bring in crypto to spend at our merchants from other places. And I think that that's the real exciting part, is that we're just at the beginning of this. And the beauty of creating these platforms is that you don't really know what people are going to be able to do with them until they're there. I think Uber, Airbnb, these things were not a gleam in anybody's eye until you had technology with mobile and GPS and payments. And so I think the sky's really the limit.
And from our perspective, what we're trying to do is we're trying to take this amazing underlying technology and then package it in a way such that it is usable, right? So that's where kind of my tech background comes in, is where can we identify the friction in the process, and how can we make it seamless and effortless behind the scenes? And so, we also just launched staking this week. So people, so you can take your Solana, which is live right now, and you can stake it on Binance US, and I think you can generate 5 to 6% yield and return. And we have a new feature called auto compounding, so you can set it effectively and forget it. And what we really focused in on is not just offering staking, because that is kind of the base case, but it's doing it in a way that's very user-friendly and intuitive. So within a couple clicks, you can stake. And so within 24 hours of announcing it, we have already $10 million worth of staking, which is obviously quite incredible for quick adoption.
Free money is very appealing in general. Edith, one of the things that I find interesting about the raise capital premise is, on your site you talk a lot about it's never too early, right? To come and talk to us, and that you're very interested in these truly early stage companies. But is there anybody now that you're seeing that you're like, I wish that we had spoken to them, kind of in that crypto context? Not him.
Of course. Of course, Binance. I think what's really interesting to us recently, even with the downturn, we just invested in an engineer left Block, because he really wanted to launch certain things and it couldn't happen. So he left, and we're the only investor there. And then we just invested in another engineers that have worked on Libra at Facebook before. Again, very, very frustrated and wanted to build something on their own. And we're finding really just amazing Web2 developers, been studying on their own in crypto, and now they're like, you know what, I'm okay to give up my high-paying jobs to do something that's really meaningful. That's really exciting. There's another area on the adoption, I'm kind of shifting a little bit, is the whole NFT. Sort of is actually, most of the users don't even have a crypto wallet, and for the first time, they want to put a credit card in to buy some sort of NFT, and whoever the platform is would actually, sort of be the wallet for them for the first time. That whole area have a whole shift of, I don't know, maybe label it Web 2.5. It's really about bridging the two, and we're seeing really, really amazing engineers, not just the 20-year-old who have never launched anything before, but folks that actually have taken things to production in hundreds of millions of dollars and going into this space. Super exciting.
Edwin, you, in your other life, run a very interesting big cat retirement home. And I mean that in the most literal sense of you take care of tigers. How do you square your, not kidding, you should Google it. How do you square your commitment to that awareness of the environmentalism and climate with the, the elephant in the room of the environmental considerations around crypto?
Yeah, no, it's a great question, and it's definitely something that I've thought a lot about. The climate crisis is real. I'm going to go on record as saying that, and I think that we have an obligation to make sure that whatever we're doing, whether that's in the Web 2 space or Web 3 or in the crypto space, that we're doing it sustainably, because we want this to be for the long haul. So we've actually published, in conjunction with CCRI and South Pole, a new measurement framework around this, so that we can have a consistent set of measurements around climate impact for mining, particularly with proof of work based protocols.
Like Bitcoin.
Like Bitcoin. And what we're now doing with that is we're using that to measure not only our own impact, but also our full supply chain. And then based on that, we're going to take some meaningful steps to go and work on both at the protocol level as well as at the application level to go and start to address that. But our first view was, there's a lot of ways you can pick any different country, and that is the amount of energy that Bitcoin mining uses. What we wanted to do was really take a science-based approach to that measurement, start off with a baseline, and then continuously iterate across that. And I feel very good about the commitment that we're making at that. We've actually rolled that into our ESG principles, so we intend to be, and so we measure crypto in exactly the same way that we measure all of our other payments impact, and we're taking action against that.